You're listening to this podcast, so I know you've got a curious mind. Here's a helpful fact you may not know yet. Drivers who switch and save with Progressive save over $900 on average. Pop over to Progressive.com, answer some questions, and you'll get a quick quote with discounts that are easy to come by. In fact, 99% of their auto customers earn at least one discount. Visit Progressive.com and see if you can enjoy a little cash back. Progressive Casualty Insurance Company and Affiliates. National average 12-month savings of $946 by new customers surveyed who saved with Progressive between June 2024 and May 2025. Potential savings will vary.
LinkedIn Hiring Pro can't predict the future, but it can help you feel confident about future hires. Because Hiring Pro combines real-time insights and candidate data from the LinkedIn network with the criteria you've set for your role to deliver you a list of top-fit candidates. Businesses who use LinkedIn are 24% less likely to reopen a role in the next 12 months. Hire right the first time with LinkedIn Hiring Pro. Post a free job today at linkedin.com/quality.
It's Monday in America.
It is Monday in America. How did you know?
I just get a little tingle in my spine. I can tell.
Because we have access to a calendar.
Wait a minute. Hold on.
Fine folks in Gregorian times.
Not only
put it in order for us. Let us know.
By the way, when wasn't it the Romans that came in and fixed the calendar? Like, why is October not the 8th month? Once they changed it to the 12-month calendar.
Because they named it after
Why is October
Octavius.
the 10th month? Because they what, Doug?
It's named after Octavius, emperor, it's not after the number 8.
It's not a Spanish name, meaning 8?
No.
I think it is. I thought
it was named after the mom that was on, like HGTV that had all the children.
Octomom. Yeah.
She's doing pretty good from what I understand.
Do you notice anything, OG? Do you notice anything right now? You notice what Doug's just casually holding out there? Like all braggy brag? Look at him. All braggy bag with his mug.
Did he finally buy one? We've paid him enough.
Oh, you're talking about my coffee mug. This thing just showed up in the mail. I meant to ask you, are we sending these to everybody? Like, I have no idea why I would have gotten a Stacking Benjamins mug, but I thought that was pretty sweet.
We're testing out this vendor, but turn it around. Look at this. It doesn't matter what side. If you're left-handed or right-handed, you can still show off the logo to your friends.
This is innovation in crockery.
I know. Not on one side, but on two sides, it says
two
SB.
Sides. I didn't even notice
it's incredible.
that. I didn't figure that out. But it is, this is great. I think our ratings are going to skyrocket. If we sent these to all 9 people that listen to us.
We got to see, how the vendor does. If this vendor is, I don't make the decisions. We got to talk to Tina. Tina, can we send these to everybody? Can we send these to all 9 people? You know what we can do, though, for free? We don't have to ask Tina if we can do. That is salute the troops, like we do every Monday here on the show. So on behalf of the men and women in Mom's Basement Making podcast, and on behalf of the men and women who are, I'm pausing everybody if you're not watching the video because Doug is doing the extreme.
What if I just left it here the whole episode? So it's just like a talking mug.
I think, that would be better. Just your mouth and the mug in front of you. Yeah, I like it better. So on behalf of the men and women make a podcast in Mom's Basement and the men and women at Navy Federal who serve our troops, here's to those troops. Kept us safe all weekend, and we'll do the same, I'm sure, this week. Let's all go stack some Benjamins together now, shall we?
Thanks, everybody.
You heard of this thing, the 8-minute abs?
Yeah, sure, 8-minute abs. Yeah, the exercise video. Uh-huh.
Yeah, well, this is going to blow that right out of the water. Listen to this. 7-minute abs.
Live from Joe's mom's basement, it's the Stacking Benjamin Show. I'm Joe's mom's neighbor, Doug, and advice all over the internet warns you about what you should and shouldn't do. Today, we dive into a concept called the wealth ladder and identify who should listen to which advice so that you can build wealth faster. And in our headline segment, new tax legislation in the One Big Beautiful Bill creates a potential new wrinkle in your Roth conversion strategy. We'll share how to avoid a potential landmine. I'll also share a TikTok minute teaching you how to stack loads of Benjamins, and of course, I'll share some absolutely mind-bending trivia. Mind-bending! And now, 2 guys who know that wealth isn't built in a day, but it can start with payday. It's Joe O-and-O-J-J-J-G.
Happy non-specific time of the day, stackers. I am Joe Saul-Sehy, and welcome back to the Stacky Benjamin Show. You made it. You found us. Sit back and relax, because if you don't know what a Roth conversion strategy even is, as Doug was talking, don't worry, we got your back. We'll explain that and talk about what all the hullabaloo is.
Hullabaloo.
But first, the gentleman across the card table from me, Mr. OG, is here. How are you, my friend?
Happy to be alive. Happy to be able to do Roth conversion ladders.
It is.
Maybe, actually. Who knows? Maybe you're going to tell me I can't do them anymore.
If you wake up in a morning and you can do a Roth conversion ladder, like, you're skipping to work. You are skipping to work. It's a good deal. We not only have that, though. Nick Majuli coming down to the basement on Wednesday. For those of you who don't know who Nick is, not only is he the chief operating officer. I almost said chief operating officer.
Yeah. Some companies need that out of their COOs.
Yeah. If I can get help, get it cheap. That'd be great. Barry Ritholtz probably said. I think that's fiction, because nothing about Nick Majuli is cheap. He has a fantastic blog called Of Dollars and Data that we've referenced how many times on the show? And this will be Nick's third or fourth time with us on the show. But he talks a lot, OG, about this idea of the wealth ladder. So to get everybody warmed up to Nick's appearance on Wednesday as he mentors us on good and bad investments, we're going to dive into the concepts and make sure that everyone's ready. And even if you can't catch Wednesday, you know what? Today, we're going to help you make better investing decisions wherever you're at on the wealth ladder. That's what's coming up, OG. Excited?
Beyond.
Just tickled pink, as Mom says.
There is not an exclamation point anywhere in OG's being, I think. Hey, how you doing today? This Monday morning, OG, doing great. Happy to be here.
Well, I'll tell you what does get OG excited, and that is talking about building the wealth ladder. But just to calm him down, we have a couple sponsors we're going to hear from first, so he can relax and kind of lean into this. These sponsors help us keep doing what we do, and you don't have to pay a dime for any of this goodness. So sit back like OG and relax. And coming up, we're going to dive into Nick Majuli's wealth ladder. You may not know that when we started Stacking Benjamins, it was a blog. And even then, just the startup cost, I remember thinking, is this the right thing? And what if I write things and nobody comes, right? Well, luckily, that didn't end up happening. But starting something new isn't just hard. It's terrifying. There's so much work. You're not sure whether it's going to work out. You're not sure if anybody's going to read it. And then we changed it to a podcast. Is anybody actually going to listen, right? What if nobody wants all the stuff that we have? Well, had I used Shopify, it would have been even easier, because with their expertise, their helpful tools, and their easy to use platform, that's something that would have made Stacking Benjamins more effective much, much more quickly. Shopify is the commerce platform behind millions of businesses around the world and 10% of all e-commerce in the U.S. Names you've heard of like Heinz and Mattel, Shopify, Gymshark, Aviator Nation, Allbirds, also all Shopify. Get started with your own design studio with hundreds of ready-to-use templates. Shopify helps you build a beautiful online store that matches your brand style. And best yet, Shopify is your commerce expert with world-class expertise in everything from managing inventory to international shipping to processing returns and beyond. And did I mention that iconic purple Shop Pay button? It's used by millions of businesses around the world. It's why Shopify has the best converting checkout on the planet. It also helps boost conversions, meaning less carts going abandoned and more sales for you. So you're stacking Benjamins much more quickly. Time to turn those what ifs into with Shopify today. Sign up for your $1 per month trial today at shopify.com/SB. Go to shopify.com/SB. That's shopify.com/SB. Dell PCs with Intel Inside are built for the moments you plan and the ones you don't. They're for those all-night study sessions, the moment you're working from a cafe and realize every outlet's taken, the times you're deep in your flow and can't be interrupted by an auto update. That's why Dell builds tech that adapts to you. Built with long-lasting batteries so you're not scrambling for an outlet, and built-in intelligence that makes updates around your schedule, not in the middle of it. Find technology built for the way you work at Dell.com/DellPCs. Built for you. So let's talk about why this idea is important. You have seen it, OG. I've seen it. Heck, Doug, you've seen it, where people are fighting on the internet. Why would you do something stupid like that with your money? Or they're giving some well-meaning advice. You know what you need to do? You need to go out and buy some gold. Or I think that crypto is for you. When this person knows nothing about you, they know absolutely zero. And to your point, this could be good advice for the right person. But truly, it depends on where you're at in your journey. Somebody who's 20 and just starting out should get different investment advice and tax advice and estate planning advice and insurance advice than somebody who's 55 years old, has done a great job of saving. Maybe they've accumulated $3, $4, $5 million. Those two people should be invested in different things.
Well, maybe, but you should approach it differently for sure. I think there's a lot of people who want to look at the future. Use that 20-year-old, for example. 20 is a little young, but let's say the 28-year-old. They're worried that they're missing out on stuff. So they want to do all the stuff that the 50-year-olds are doing. And it's like, okay, well, you have to do this the right way. If you do it in the wrong order, then you're setting yourself up for the opportunity to have these wild swings in cash flow or results in your plan because you're thinking that you're behind. And I think all of this ends up stemming from the sensation of I'm not where I'm supposed to be. And one of my main messages is you're okay. You've got plenty of time to get there. You don't have to do anything extreme. If you are behind, air quotes, you don't have to do anything extreme. Just let the process work.
What I like the most, Joe, about what he just said is that he correctly stated that people in their late 20s are envious of all the cool things that people in their 50s are doing. I think he nailed it, man. And I don't think they realize just how good it is up here.
When I was in my 20s, that's all I did was sat around and thought about, if I were only in my 50s.
Look at that 55-year-old dude. That dude's crushing it.
Slaying it. Yeah.
He gets to go to bed at 7:30.
I'm thinking about it from the investing perspective, right? It's like the number of people that I've talked to that are not maxing out their 401ks, but want to know about how to do mega backdoor Roth conversions. And I'm like, you're not at that spot yet. And it's okay. You're saving $5,000 a year in your 401k. That's awesome. Good job. You're not at the spot where you're going to save $50,000 in your 401k yet. And that's okay too. And I get like wanting to learn about it and educate and that sort of thing. But by the time you get there, it might be different. So focus on the stuff that where you are right now and make those small changes, make those small improvements. You'll get to the spot where it's like, oh, geez, I'm maxing this out and I have extra and my spouse is maxing out and we're, and it's like, and now I'm like, now what do I do?
I had a personal story when I was first starting out. I was struggling and trying to begin climbing out of debt. And my father-in-law, a very well-meaning man and a smart guy, but didn't know enough about money to discern where he was from where I was. He sits me down, OG, and tells me about this phenomenal thing that he puts money into every month where it's for retirement and it grows tax deferred. And it turns out he's investing in an annuity. And he thinks that me at 25 years old at the time, that, you know what, it'd be a good idea if I started one of these too. So I get on the line with his broker at the time, and the broker, God bless him, asks me a bunch of questions about myself and goes, here's what I want you to do. I want you to keep focusing on your debt. And then I want you to build an emergency fund. And then I want you then to call me back and you and I will talk about maybe setting up some mutual funds outside of an annuity. But well-meaning people will give you advice because it fits them.
Oh, but even that advice that you got, the first part of that is you need to pay off your debt and build an emergency fund. That's where you are on that. And if you would have, or where you were with that, and if you would have said, no, you don't understand. I want to know about mega backdoor Roth conversions.
Right. I want to know about this annuity thing.
Yeah. Or the triple tax-free nature of an HSA. Shouldn't I be doing that? Right. And you're like, well, I mean, yeah, but you also have $80,000 of student loans. So you can have all the tax-free money in the universe while you're paying freaking 8% on your student loans. You're not making any progress. Your net worth is going backwards, bro. Like, do the thing where you are. It's totally fine.
I'm going to bring up some concepts that we're going to ask Nick about as he mentors us on Wednesday, just so that we all get these locked down, because I think these are really important for us to get. And I know that we only get to spend maybe 30 minutes with people like Nick on the show. What Nick is going to talk about on Wednesday is what level of financial decisions in your life are trivial. A proxy for this on any level of wealth is if you take 0.01%, so not 1%, but 1/100th of 1%.
1/10 of a percent
of your net worth, not 1/10, 1/100th of 1%.
Oh, okay. So 1/100th of a percent then would be $1 on 10,000.
Yeah. Which is why for your first $10,000, Nick talks about, OG, there are no trivial decisions because $1, right? On $10,000, $1 is a big deal. Those types of decisions are every decision's a big deal. And when you've got a $10,000 net worth, you need to worry about the emergency fund. You can't have any debt escalation to any degree because you don't have the wherewithal then to just wipe it out whenever you want. You need as much insurance as you can get because of the fact that if something bad happens, that insurance companies are working on your behalf. When you get to $100,000, now you can make decisions at the grocery store and not worry about them that much. Some people might go, well, that's kind of conservative. I think Nick does this on purpose because if you start off with just what won't harm you and then work the other way versus the way most people look, OG, which is what's my biggest opportunity? Oh, I've got $100,000 net worth. I'm going to take $25,000, loan it to my buddy who owns a restaurant. That is a horrible decision because your trivial decisions should be at the grocery store, a $10 decision. At $1 million, if you have $1 million net worth, you know how everybody says that glass of wine is a waste of money at the restaurant? At $1 million, who cares? Because you can blow $100 and $100 to somebody with $1 million net worth, completely trivial. You get then to $10 million, $1,000 extra on travel, big deal. Not that big a deal.
Yeah, no matter how high you go up the ladder, it's always a bad idea to lend that money to your buddy with the restaurant. Never, ever, ever do that.
If you're being conservative and you want to invest in companies, and of course, it's Nick, so he goes through all the data on this. It is at $10 million that you can very easily feel comfortable with buying businesses. It is well within your comfort zone to go buy a business and it's going to be fine. And I know, OG, again, to your point, you don't have to buy a business to get where you want to go. But at $10 million, if you want to go invest in a business and maybe not Doug the restaurant, that's a fine idea. But let's go back to somebody with that first $10,000. I think for somebody with that first $10,000, like I think the emergency fund's important, but I also think people with that first $10,000 for their long-term money, I think they also overthink diversification. I think that if you're diversified in just an exchange traded fund or a mutual fund, you're fine. But I think, somebody with less than $10,000 going into a target date fund or going into a, bonds because they're worried about the ups and downs. I think if you're working on that first $10,000, OG, that just get into something like the S&P 500 or the total stock market. And I think that might be all the diversification you need with your long-term money.
I agree. I think when you're just getting started, the biggest components of building your plan the right way is making sure that you've got enough cash on hand, which sounds very counterintuitive to long-term investment growth. But the way that you get to invest money is by having cash to cover your emergencies and keeping it simple. The sexiness of fractional shares makes it seem like, oh, it doesn't matter. I can just, I don't have to buy 100 shares of this ETF to make a trade. It doesn't cost anything because everything's commission free now. Why can't I have 10 different ETFs? And it's not that you can't. It's just there's no efficiency gained. You're going to lose energy on trying to maintain a portfolio of 10 positions when you have $10,000 in your investment account versus the simplicity of dumping into one all world fund or one S&P fund or something like that.
For somebody who's, regardless where they are on the wealth ladder, I think there's a key box that I've seen people accidentally not have checked. And I just saw a great graph on this recently. I'll try to share it in the Basement Facebook group this week. But it's the difference between investing in the S&P 500 and investing in the S&P 500 and making sure that you reinvest dividends. Like over a 30-year period, OG, the difference having that reinvest dividend box checked and not having it checked is a monster amount of money on a $10,000 investment.
Well, I think what they're comparing it to is taking the dividends in cash.
Right.
As you get further up, I guess what he's calling the wealth ladder, I would argue that you don't want your dividends reinvested and you want to be in charge of where you want to put that money. But from a simplicity standpoint, let me put it this way, you can't take the dividends in cash and not do anything with it. If you need to automate it so that you don't let it sit there for a year, then automate it.
I think if you're in step 1 of the ladder, step 2 of the ladder, reinvesting that dividend is a huge, huge thing.
Hey, can I pause you guys just to help reset this for some of our listeners? Because we've been talking about rungs on the ladder almost as a factor of 10, 10,000, 100,000, million, et cetera. How do I know where I am on my ladder? I can anticipate you're about to say, well, Doug, it depends on what your policy statement is and where your goals are.
No, it's your net worth. It's 100% your net worth.
So how do I know if I'm on the second rung or the 20th rung?
Add up your net worth. If your net worth is from 0 to 10,000, you're on, according to Nick. So these are Nick's numbers.
So these numbers are sort of absolute, regardless of your end goal.
These are Nick's numbers about how you invest your wealth.
Okay.
He's going to on Wednesday break it down 0 to 10,000, 10,000 to 100, 100,000 to a million. Just keep adding the next zero, and that's where you're at.
Okay.
Second ladder step, 10,000 to 100,000. I'm trying to think, OG, what changes when you get to 10,000 to 100,000? This might be the spot where you can raise your deductibles on your insurance, maybe to save a little bit of money. Did I say that right, Doug? Insurance. I think it's in insurance.
Insurance. The emphasis is on sure. We'll cover that loss.
I think it's insurance.
It's not in.
Does much else change between 10,000 and 100,000 for somebody that rung number 2?
I would argue that if you were at a month of cash reserve, you want to get to 3. If you were at 3, you probably want to be at 6 and have that piece done. From a net worth standpoint or investing standpoint, I don't see much of a difference between 10,000 and 100,000. Again, you're trying to keep your life simple, not complicate it.
$100,000 to $1 million is, I think, where the rubber starts meeting the road. I'm being a little more precise. What changes do you think? And I think this is probably the majority of our listeners are in this area. Don't get me wrong, Stacker. If you're starting out, man, can't wait to have you in that 100,000 to $1 million net worth area. But for this group of people, if we're just looking at that net worth, what am I really focused on then?
Does he mean investment net worth or total? Because for a lot of people, this could be your house too, included in this.
Yeah, it's interesting because for people in these first 3 rungs of the ladder, a big part of their net worth is in their personal home, in their personal home and in their 401k. And then it's actually when people get past $1 million OG, where you see that personal house becomes less, rental real estate becomes bigger. By the way, these are statistics of people today, just the way things naturally happen to be. People investing more in that, but personal property is a big piece of that puzzle. Somebody between 10,000 and $1 million. Maybe part of it's what you talked about, getting that mortgage paid off.
Yeah, I think the difference between 100,000 and $1 million is so profound. It doesn't take long to go that path, but I think the mindset is wildly different, along the way. I would break this down into a couple of different groups. I think the 100 to 300 is where you start really seeing some acceleration of your investment portfolio. And I'm thinking not real estate, right? Let's just exclude that for a second, because obviously that could sway it quite a bit. 1 to 3, you start seeing some really big traction going on. And then that kind of 3 to 5 number. And then it seems like you go from 5 to $1 million pretty quickly. And for those who are in the middle of that, they're going, it doesn't seem very fast, but measure backwards and look at how long it's taken you. If you've been saving money and investing, like put a chart out and go, well, it took me 12 years to get to 100. It took me 4 years to get to 2. It took me another 2 years to get to 3. It took me 18 months to get to 5. That shortens every time because you're starting this snowball of compounding. But yeah, I think from an investment standpoint or kind of financial planning perspective, I want to make sure that we've got a really good handle on debt and cash flow between 100 and $1 million. If, Lord willing, the only thing you have is your house, I think it really makes sense to consider how you want to pay that off. I've never met anybody who's paid their house off that's like, dang it, I really wish I had a mortgage, And I know that there's the math that says, well, my house is at 3%. Isn't it better? It's like, yes. However, look at that mortgage payment and how much money you have to make and how much money you're not saving, and not investing on an annual basis. And then I think from an investing perspective, maybe halfway through this 100 to 500, maybe somewhere in here, you start thinking about some additional diversification. It's not going to hurt, but I don't know that it helps that much. And so you want to be careful in saying, okay, at this level, now is when you get to like play the game, because it's not really, that's not really what you're doing. If you look at Paul Merriman's thing, he's like, okay, if you put it on the S&P, you're good, right? Like you're golden. But if you add 10% to this, you're golden plus,
fractionally better,
a little bit better. Like you are adding so much little marginal benefit by adding diversification that really what you're doing is you're trying to prevent a scenario where you're going to make a big mistake because the sector or the part of the economy that you're invested in goes through a recession. If you've been S&P 500 the whole time, right? 2015, you started investing. It's 2025, you're 10 years into it. You've only put money in the S&P. You've only experienced the US market going up, except for like a little teeny blip here and there of COVID in 2019, right? 2022. As these numbers become bigger, the swings in your portfolio become greater from a dollar standpoint. The percentages are the same. The S&P was down 20% in 2022. It'll be down 20% again someday, right? But we don't spend percentages. We spend dollars. And when you look at your portfolio and you go, you had $10,000 and it went all the way down to 8, you didn't think like, oh my God, that's 20%, right? You just went, down $2,000 this year. But when you have $1 million and it goes down 200,000 to 800,000, still 20%, right? The experience is profoundly different. And so the benefit of diversification at that point, where you start adding different economies, international or emerging market or big companies and small companies, being a little bit more specific around that. The benefit is there's likely to be a sector where it hasn't affected it, that minus 20. And now it gives you an opportunity to start reinvesting.
People get excited about diversification because they think that it adds alpha, that it makes your portfolio grow faster. You're saying it's exactly the opposite, OG. It's because you now have something to protect. Now you.
Yeah, I think statistically it does help you, right? You could look at the risk return curve and just say like, okay, if I want to be the riskiest and the highest return, I would put all my money in small companies. But what's the trade-off? The trade-off is every so often they lose 2/3 their value.
Whoops.
And there's not a lot of people around that have experienced it with any real money to see what that is. I talk about technology stocks all the time. And those of us who are investing in the late 90s and early 2000s remember this anecdotally, but never really experienced it. Because people who are, 70 with tons of money in the market right now, we're 40 with not tons of money in the market. You know what I mean? Like it's been so long now that we really failed to appreciate how impactful and what it really means when you say, well, I'm just going to put all my money in tech stocks because that's the future. Just give yourself the dollar amount and track that in the 2000s, the first decade. The NASDAQ went down 78%. And it took 15 years to get back to even money, 13 years to get back to even money from March of 2000.
I was thinking, just track it from 2000 to 2002 and see how you felt.
Well, that's fine, because I think people will look at that and go, I could stay the course. And it's like, okay, cool. Good for you. But tell me you have $1 million in tech stocks right now, and you'd be okay with it going down to 180,000 or 200,000, $1 million down to 200. And it stays down at 200 for the next 13 years. And sometime in 2038, you get back to $1 million. But I promise from 2038 to 2050, it's going to skyrocket. You know what I mean? Like we can't conceptualize that. There's not a person in the universe that's going to watch 80% of their portfolio go down and not do something about it.
I think at $500,000, I like how you break these up too, OG, but I think at $500,000 is where tax planning really can.
From a planning standpoint, yeah, absolutely.
$500,000 is where tax planning starts to rock. Looking at your tax triangle, stackingbenjamins.com/tax triangle, if you want to see a graphic of what we're talking about with the tax triangle, starts to make sense, $500,000. But then $1 million to $10 million, OG, when you get above that $1 million mark, and now you're growing into $10 million. And by the way, A lot of us think 10 million is rarefied air. Here's something I learned from Nick that I didn't know. How many people in the United States do you think have $10 million or more? 2 million. 2 million divided by 50 states, that's 40,000 people per state. And what also strikes me about this too, where, Nick is really focused on net worth here, but we will talk about income. And the quickest way to grow your net worth that Nick
To save a lot of money.
hammers, well make more money.
Mm-hmm.
Historically, when he looks through all the data, and this is where Nick shines, when you look at the data, you and I have gotten a lot of pushback. Why do you focus so much on income? This is a finance show. Because making more money makes this so much easier. It makes it so much easier. And all of Nick's data proves it out even more than I thought. But if there's 2 million people, 40,000 people in every state, if we just divide the states evenly, that have done this before. I go back to our first interviews of 2025 with Alex Hormozy, and he says, OG, if you don't have $10 million, you're paying an ignorance tax. And I remember that like it was a slap across the face. Like, what? He's like, if 40,000 people have done it, all 40,000 people in your state that have done it are not smarter than you. They're not smarter than you. You're as smart as many of those 40,000 people, and yet they've done it, and you haven't done the research to find out how to do it. I found that pretty powerful.
You're right. That is a little slappy facey.
It's so smarmy.
I'm not sure that I will drink all of the Alex Kool-Aid on that. I'll take a little sip just to see what it tastes like. A little blue raspberry, perhaps.
Just a tip.
Yeah.
Just a sip.
But I do think that the way to look at this is if there's a level of success, whatever that means to you, whether it's investment, career-wise, knowledge, that you haven't achieved that you want to, there is likely a recipe card already in existence. And there's lots of different recipe cards to do it. You mentioned, hey, if you've got $1 million of net worth or $10 million, maybe you can go buy a business. Okay, that's not like a normal, common coffee table conversation with people. Like, hey, so did you guys buy a laundromat this week? I did. Like that's not a thing, but you can learn about that. Hell, you can just let your $1 million compound in the market for a handful of years and you'll get to 10 million. The thing that just blows my mind is, we talk about Warren Buffett being one of the greater investors of all time, mostly because in his words, he used a lot of time on his side. It happened to grow up in the greatest country and the greatest economic boom in that country ever. He got lucky, basically, is what he talks about. But his net worth when he was 50 was $60 million. And that's a lot of freaking money, right? That is a lot of money. His problems at 0.01% or whatever are like nothing. But he also still made the decision of which, Egg McMuffin he was going to have in the morning. Was he going to have a hash brown or not have a hash brown based on how the market was doing, right? So he was frugal even then. But now you look at his net worth and it's whatever it is. I don't even know, $100 billion or it's some insane number. How did he get from 60 million, which is crazy, to 100? It's just time. So the faster that you let that compounding muscle work, the more likely it is that some of these higher numbers that you see or you hear about are realistic in your life. You don't have to spend all your money. You can save some of it along the way. But there's a recipe card for it. And if you want to be successful and your definition of success is tied to a net worth number, and you're like, how do I get to 10 million? There's a path for that.
And to reset again, back to the beginning, each of these wealth ladder points, Nick is going through, if you wait until this point, you won't blow yourself up. So by focusing on saving as much as you can, but having adequate insurances and your emergency fund 0 to 10,000, you won't blow yourself up. 10,000 to 100,000, getting that primary residence down, throwing as much money into investments as you can. Now maybe raising your deductibles to save a little bit of money, 100,000 to $1 million. Begin thinking more clearly about more scientific diversification, both from the upside and the downside. At $500,000, looking at tax planning. These are to not blow yourself up. At $1 million, and this is interesting because you'll see a lot of people get here before this, OG, buying individual pieces of real estate. This is the point where Majuli goes. If somebody's giving you real estate advice, you've less than $1 million net worth, good chance that illiquidity could blow you up. If you've got more than $1 million net worth, less likely that's going to blow you up. So $1 million to 10 million is where real estate enters the picture for Majuli.
I remember seeing it was a YouTube short or something. Do you know who Kyle Bass is? Heard of him?
I have, and I'm scrambling to place how I know.
So he's
Kyle
a hedge
Bass.
fund guy here in Texas, Dallas,
Of course.
and Fort Worth.
Fort Worth, yeah.
Famously made a bunch of money subprime, a little cuckoo for Cocoa Puffs, but he's got he's been successful, right? He's got a recipe card, right? You don't have to like drink all his Kool-Aid, but maybe just have a little taste. But I saw this thing the other day that he was doing. He's like, if I was investing, if I was starting out or whatever, he's like, I would buy 100 and 500 acre plots of land just outside major metropolitan areas and hold for the next 25 years.
Right.
And it's like, well, yes, of course you would, sir. You have $17 trillion. That makes a lot of sense for you to own a bunch of farmland just outside the city limits of all these big cities in US of A. And go, I'll just wait for urban sprawl to catch up. Some idiot will want to build houses here sometime in the next 3 decades. Also true, but probably not the greatest investment for the person who's got, $800K in their 401k going, I think I'm ready for the next thing. Probably not buying 100 acres of farmland, just outside Dallas to hold for the next generation.
And especially not for the people that are the vast majority of TikTok consumers, right?
Yeah.
So somebody just starting out and they're on that first rung of the wealth ladder.
Kyle Bass said I should take all my money and buy this plot of hunting ground up in
Sweetheart,
Bozeman.
you're 13.
You're watching TikTok, you're acting like 13.
$1 million to 10 million tax planning becomes, I think, also crucial, not just the real estate portion. What else between $1 million and 10 million can you think of, OG?
I mean, this is such a wide range. I think the thing that you want to be cautious of is marrying the idea that I need to do something wildly different because I've hit this, this pull-up bar versus what got you here won't get you there. Right. So you got these two competing thoughts of, well, I got to do something different. I got $1 million now. It's like, well, do you? I mean, you did a pretty good job to get to you're 34 years old. You got $1 million net worth. Like, do you sure you want to mess with the formula? Like, it seems to be working pretty good. Also, there's an opportunity to do other things now, right? And so how do you marry those two things together? I think you have to be really cautious on as Grandpa would say, getting too big for your britches.
Yeah, I think the big thing here for me is I think it's time to really focus on, and I know you should have an estate plan from the beginning, but I think your estate plan decisions begin to change as you get closer to $10 million.
Yes, that changes. Your charitable giving changes. Hell, your time choices change. Like you're closing in on $5 or $7 or $10 million net worth. Are you thinking, well, maybe now's the time to really pull back? If you're 45 and you've accumulated $5 million of net worth, I mean, you've done so with pretty good discipline. Are you about ready to start trading your time back a little bit? I think you have some really tough decisions to make as you're crossing that, kind of marrying two concepts here. But as you're crossing those fire numbers, you're starting to get to like, well, what else do I want to do now? Because I don't have to keep shoveling money into this plan because I've got $5 million and I'm 40 years old, or I'm 45, or I'm 50. Life planning, I think, becomes more important. There you go. That's what I was looking for.
Yeah. And this is a danger that people face, which is when I'm on wealth ladder point number 1, I think some things are going to make me happy. And when I'm on wealth ladder step 4, $1 million to $10 million, OG, it's a whole different number of things that make me happy. Like, if you go back to that 0.01% of your net worth, you're struggling. You know what? Camping is a lot of fun. And you learn that camping can be a great time to just recharge and get away. When you have a $10 million net worth and $1,000 isn't going to change anything, you may decide to go different places and do different things. And you'll often see people that give judgment to the way I'm going to feel later on in my life. They might make some long-term decisions that don't pan out when your net worth begins to accelerate. Fascinating discussion. We're going to dive more into this on our 201 newsletter. And of course, on Wednesday with the man himself, Nick Majuli. I'm glad we were able to go into some of the concepts and hopefully for a lot of you, makes them start thinking, really, where am I at on the wealth ladder? And what am I paying too much attention to that maybe I shouldn't be paying this much attention to? Or is there something that I'm avoiding that should be a part of my financial planning discussions? Coming up in the second half of today's show, we've got a TikTok minute with some relationship advice. And the big, beautiful bill has maybe a little Achilles heel. We're going to cover those. But Doug, before we get there, you've got some trivia about today's date in history. Is it a birthday today? Is that what it is?
Big giant question.
I don't know.
I don't know either, Joe. Let's find out together.
I haven't read it yet.
Hey there, stackers. I'm Joe's mom's neighbor, Doug, and today's the birthday of the amazing late actor and comedian, Robin Williams. Williams is known for a ton of roles, but the one which launched his acting career was arguably his role as Mork on the classic show Mork and Mindy. As Mork, Williams played an alien who's trying to understand human culture. But here's a question. Mork and Mindy is a spin-off series from another even bigger hit show from the 70s. Which one? I'll be back right after I go practice combing my hair. I heard it makes me look great while I'm jumping sharks.
You're listening to this podcast, so I know you've got a curious mind. Here's a helpful fact you may not know yet. Drivers who switch and save with Progressive save over $900 on average. Pop over to Progressive.com, answer some questions, and you'll get a quick quote with discounts that are easy to come by. In fact, 99% of their auto customers earn at least one discount. Visit Progressive.com and see if you can enjoy a little cash back. Progressive Casualty Insurance Company and Affiliates. National average 12-month savings of $946 by new customers surveyed who saved with Progressive between June 2024 and May 2025. Potential savings will vary.
What would you do if your online store converted 36% more shoppers? You could take 36% more vacation.
Another pina colada?
Yes, please.
Open a new retail location with 36% more square feet.
Fantastic.
Hire 36% more help.
You're hired and you're hired.
Shopify has the world's best converting checkout, up to 36% better than other e-commerce platforms. What you do with those extra sales is up to you. Switch to Shopify today at shopify.com/listen and get a $1 trial. Shopify.com/listen.
Did you know Fast Growing Trees is America's largest and most trusted online nursery with thousands of trees and plants and over 2 million happy customers? Whether you're planting fruit trees, adding privacy, brightening things up with flowers, or bringing in houseplants, Fast Growing Trees has it all. Even better, they can help you find options that are right for your climate, your space, and lifestyle. Click Order Grow. Every plant arrives healthy with the Alive and Thrive guarantee straight to your door. So if you're ready to get planting, this is the moment. Right now, they have great deals on spring planting essentials, up to half off on select plants. And listeners to our show get 20% off their first purchase when using the code WWO at checkout. That's an additional 20% off. Better plants and better growing at fastgrowingtrees.com using the code WWO at checkout. Fastgrowingtrees.com, code WWO. Now's the perfect time to plant. Let's grow together. Use WWO to save today. Offer is valid for a limited time. Terms and conditions apply. Go to growingfasttrees.com for details.
Hey there, stackers. I'm old television show lover, but guy who's never been comfortable taking a 3-hour boat ride anywhere, Joe's mom's neighbor, Doug. It's Robin Williams' birthday today, and in celebration of the late actor and comedian, we're looking back to one of his early roles, Mork, from the classic show Mork and Mindy. But what huge Benjamin-earning show did Williams first appear on as Mork? The answer? Robin Williams first appeared as Mork alongside well-known actors like Henry Winkler, Marion Ross, Tom Bowsley, and Ron Howard on the show you know as Happy Days. This wasn't the only series Happy Days spawned. While there were 5 altogether, Laverne and Shirley and Joni Loves Chachi went on to big success. Hey, speaking of success, let's help you successfully manage money better. Back with Joe and OG.
OG, Mork and Mindy before your time?
A little bit.
Not much.
Not much. Yeah. I mean, I remember being on.
Man, that was must-see TV. I wanted to move to Boulder as soon as I started watching that show. And that was before Boulder just became Denver.
Was it because of Mork or you just wanted to live closer to Mindy?
Mindy. Yeah. Yeah, she was something.
Because you were 13 years old.
cute as a button. I don't even think I was that old. In fact, I know I wasn't that old when that show was on.
You were already in
so
love.
in love.
Yeah.
Oh my goodness. Yeah. And then I found out she was a Michigander, originally from Michigan.
Well, see, there you go. Even better.
By the way, so was Robin Williams. He wasn't born here, but he had spent a big part of his childhood here.
But he got to Michigan as soon as he could.
As soon as he could. And that's where he got all of his humor and his intelligence. Yeah, duh, obviously. You know what's crazy is the phrase jump the shark came from Happy Days, Fonzie, late in the series. I think it was like season 8 or something. And they get to California and Fonzie's on water skis, literally jumping over a shark. That's where the phrase came from. But why we didn't all say, hold on, like 3 seasons before that, they brought an alien on the show. That wasn't the moment where the show started to lose its way.
Right. What are we going to do? We're going to bring an alien in. That'll do it. That'll kick the ratings.
The phrase should be, we're jumping the mork or something, but we shouldn't have waited 3 or 4 more seasons to when Fonzie got on water skis in a leather jacket.
Time for our TikTok minute. This is the part of the show where we shine a light on a TikTok creator who is either saying something brilliant or air quotes brilliant. Today, OG, we have somebody giving relationship advice. Do you think that this relationship advice is going to be brilliant or air quotes brilliant?
Well, relationship advice on TikTok. Let me think about this. I'm going to say that the person has no idea what the F they're talking about.
This is advice from a senior citizen who sits in her nightgown in her bed.
Your algorithm, dude, is something else.
Named Batty Betty. Tina sent this to us and said, this cracks me up. So, no, I'm not following.
The stuff you guys search for on the internet just never ceases to amaze me. You know what'll really get my gander?
Watching a senior citizen lady give relationship advice from her bed, and she's wearing sunglasses. She's like the Hollywood advice giver, Batty Betty. And you think it's not that good. I mean, with that setup, how can this be bad? Betty is giving some advice to a young lady who is having some difficulties. And, Betty's teaching her how to turn this into a Benjamin stacking situation.
The guy I'm seeing won't commit to me, but he pays for everything. Should I stay? If he's not committed to you, you're not committed to him. Get yourself 5 other men who also pay for everything. Now you have 6 sources of income.
Bam!
Problem solved.
OG, if Mrs. OG isn't committed to you enough, just find 5 more and you'll have 6 sources of income. How great would that be?
Yeah. It reminds me of that, it was, I don't know if it was a joke comedian, like where I heard this, but it was like, I could never have an affair because I can't keep one woman happy. How in the hell am I going to try to keep 2?
Yep. Amen, brother.
It's so much work to do one. I just, anyways.
On the same idea, by the way, of advice that sounds good, Stacker Brian in our Facebook group, The Basement, shared a meme of a guy who says, every morning I go to the most popular coffee shop in town. I wait in the line, which is a mile long. When I get to the front, I sell my spot to an impatient person in the back for $20. I do this about 15 times before the lunch rush. It's called line arbitrage. Makes money every morning just selling the spot for $20. Sounds brilliant. Not the money making the money making opportunity either of you are looking for. No,
I'm okay.
Brian, thanks for sharing that. That was
make
good.
Your coffee at home, Brian.
Right.
Latte factor,
I hate
bro.
to break it to Tina, but that Betty character, she's 100% AI generated.
Well,
now it doesn't mean that the advice is wrong. It just means that the
visual. What's my favorite AI thing right now? Absolute favorite is the Bigfoot on Reddit. Have you guys seen that?
No.
Oh my gosh. It is so awesome. I'm going to find some stuff and send it to you guys because it's it's like a vlog, but it's a Yeti. He's like, hey, what up, fam? So we're going to climb up to this tree.
Don't do that after I just put coffee in my mouth.
And then the other one I saw, so I don't do socials very often, but I have dipped my toe back into Instagram, but I found this one on Instagram where it's an AI of a young lady doing the Oregon Trail. And she's like, all right, day 2, Uncle Jack looks like he's pretending to be dead so he can get on the horse. Like we've walked 6 miles so far, only 2,000 miles to go. Somebody's already engaged, or they have dysentery. I'm not sure which. Like in the wagon next to me, I'm not sure what's happening. Like, I found this farm boy, he's really attractive. Like, it's just, I think what they're doing with the AI vlogging thing, where they're taking historical, air quotes, historical things and putting, it's like they got one for Moses, and he's like, guys, check this out. I can make the water separate by holding my arms up. This is amazing. And he's like running down the Red Sea, all he's like, it's completely dry here. Watch what happens. Water, no water. Water, no water.
I like the AI where they take that sheriff who had his 10 seconds of fame when he's like, let me break it down for you. If you do this in this county, you're going to jail. But now they have him using AI say a bunch of stuff. Let me break it down for you. If you're somebody driving slow in the left lane, I'm going to pass you on the right, and then I'm sending you to jail. Yes, absolutely. If you're somebody that whistles in a grocery store, some tune that I don't understand, you're going to jail. Let me break it down for you. So funny. But the AI makes it look so good.
I just, as you gave that example of driving slow in the left lane, it just dawned on me, we are not using our considerable reach of this show to promote those kinds of the correct social norms. So I'm just going to say it now. Get out of the left lane, everybody.
If you think it's no big deal,
not going fast enough, you're not.
You're causing so many wrecks too, or potential wrecks.
Yeah, you really are. And actually that I just saw that I don't know if it was the National Highway Traffic Safety Administrator, if NHTSA, if they put it out, but somebody driving 10 miles slower, not below the speed limit, just slower than the rest of traffic, they caused considerably more wrecks than people who are driving 10 or 20 miles an hour faster in the left lane.
Well, see, everybody rush around them on the right, and there's all the people that should be in the right lane, and then they try to get in line. I don't know. Let's go on to our headline.
Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamin's headlines.
Our headline today comes to us from thestreet.com. Before we get into this is going to be about Roth IRA conversions, which we talked about earlier, OG. But for somebody that doesn't understand this strategy at all, let's just break down, speaking of break it down, let's break down exactly what is a Roth IRA conversion? How does it kind of fit in your strategic thinking?
Well, when you put money in your retirement plan, generally speaking, if you elect nothing, or if you've been doing it a long time, it goes in pre-tax, which means that the money that you are putting in your retirement isn't taxed today. It's going to grow tax deferred. And then when you take it out down the line, you're going to pay taxes on it. Well, you can do a conversion. You can say, I want to pay taxes on this today in exchange for having tax-free money forever. So a Roth IRA is 100% tax-free forever. So you can say, I want to take my IRA money or my pre-tax money and I want to make it tax-free. And you check a box and magically it happens. Now, the downside is that you get a tax bill at the end of the year for that conversion. So if you say, oh, geez, I got $100,000 in my 401k, I want this to be tax-free forever, I'm going to convert it to a Roth. Now it's just like you made an extra $100,000 this year. So you're going to have, you're going to get a 1099 that says $100,000 of income. And then you put that on your tax return and that'll work out to be, whatever it is in your tax situation, but $20,000, $30,000 probably of tax bill. Not a penalty to do this. So you're not going to pay a 10% penalty to do a conversion, but you are going to pay income taxes. So the strategy around Roth conversions is if you can time it when your income is really low, you're putting money in your IRA at a high tax rate, and then you take it out at a low tax rate and convert it to a tax-free bucket. You can do some arbitrage there.
And that takes us back to a concept that I mentioned earlier called the tax triangle, and setting your investments up so that you have as much tax flexibility as possible. Yeah. So that's at stackingbenjamins.com/tax triangle to take a look at how all that works. Well, Roth IRA conversions just got more complicated. This says CFP Robert Powell, who's the retirement senior editor at The Street, wrote this. Here is what this gets into, OG, is that there is a new tax break that seniors get, which is a new senior deduction. And that is a $6,000 deduction for taxpayers age 65 or older, or $12,000 per couple. But here's the kicker, OG. It comes with a phase out. The deduction's reduced to zero between $150,000 of modified adjusted gross income and $250,000 of modified adjusted gross income. So if you're somebody who is doing these, over age 65,
doing Roth conversions,
doing a Roth conversion over age 65, and you've done the math on your tax bill, you're essentially losing this deduction, which means the amount of money that you're actually going to be behind is going to be more than it used to be because you're not going to qualify for this deduction, which is brand new under the new bill.
Yeah. So what you're saying is you got to be aware of, if you're retired and you're receiving Social Security, you already have some income. And this is kind of part of the, the campaign promise that Trump had, right? Which was Social Security is going to be tax-free. That's what he said. They didn't get it tax-free, which I think probably honestly should be tax-free. I don't know. Do you have an opinion about this? I think
if we receive a benefit,
I mean, I paid taxes into the system to get this thing later to pay taxes on it. I feel like it should just be tax-free, especially. But anyways, okay. I digress. We digress, as they say.
This is kind of a workaround, though, is what I think you're alluding
so
to.
he wanted it to be 100% tax-free. Instead, they said, well, we'll just give you another credit, which is going to affect the taxability of this. But to your point, if you start adding additional income sources on there, you have a pension, you take money out of your IRA to live on, you want to do a Roth conversion, be aware of this new bracket, air quotes, that's happening between 150 and 250 of, if you get between there, you're going to start losing this credit or this deduction rather, that could be pretty impactful. So, that's, $12,000 on $100,000 of income is pretty decent thing. So when you're thinking about your Roth conversions, if you're doing those, be mindful of this new line in the sand, which will affect the calculations.
If you checked out on this discussion because you heard it was for people age 65, I think you might want to go back and replay it because, what this truly means is if you're doing Roth conversions, you get those done before age 65. So it's one less thing that you need to worry about. Like, have that in your back pocket already.
Yeah, I mean, it's certainly going to change. And people ask me all the time, like, okay, so I got my plan done. I'm good, right? It's like, well, planning is the thing. It's not a plan. It's not a noun. It's a verb. These are two different things. The plan is the steps that you're going to take for the next 6 months or 12 months. But if you haven't noticed, like, stuff changes. The market 3 months ago was down 20% in like 7 days and then rebounded so that it's at an all-time high. If that doesn't make you go, I got to think about my plan, I don't know what will. And then huge tax law changes. And now people are saying, oh, no, these are permanent tax law changes. Okay. Sure, buddy.
Everything the government does is permanent.
Yeah, okay. No, you don't understand. It says permanent. Yes, until the next Congress. It's very permanent for the next 18 months.
We've talked about this before too, OG, where a lot of times the value of the plan is the planning process. It's the behavioral changes that come about as you're working your way through
thinking about
the plan.
Yeah.
And then step 2 is you can't let it sit there and collect dust. It's a verb. It's not a noun.
Yeah. You have to be thinking about these things. And as you're working through your retirement income planning, as you start thinking about that in your 50s, this is a piece of it, to your point, Joe, of like going, all right, well, hold on. There's a new thing. There's a new sheriff in town of this age 65 thing. This affects how I'm going to think about Roth conversions up until 65 and beyond, honestly. But maybe it just slows your rolls just a little bit. A lot of calculations to be done on that. I think a lot of be careful. This is my only little caveat right now. Be careful of the online tools that are doing the calculations on this already. I'm not aware that all of them are up to date quite yet. It takes a little bit of programming and people have to read 1,000 pages, right? You got to read through that and get all this into the software. So be careful of the advertisements of, the calculator is good to go. I mean, it's only been 2 weeks. They're getting there. Give it a few more months to work out the bugs before you sign off on the free online calculator of tax.
Yeah,
planning.
The number's around 900 pages and a lot of it is tax. So we're going to see over the next few months, people working through a lot of these
coming
things.
up with different strategies and things that are, I just read about one today about charitable giving and how, there's some good things that are going on in the charitable giving world in terms of tax deductions and some not so good things. A lot of stuff still to come on this.
We will link to this as well in our show notes page at stackingbenjamins.com. And this piece, if you'd like to dig in more and see actually what Robert, the author of this piece, went into around this issue. let's mosey out in the back porch. This is the part of the show where we talk about our community and lots of cool stuff, Doug, happening in the community right now.
I've been sitting here chomping at the bit. I thought if I just wait patiently, let these guys talk about their tax planning and all of that stuff, we can get to the good part, which is the back porch. I want to shout out to a couple of our stackers. First of all, it's congrats to stacker Nancy in Houston.
You guys remember meeting Nancy when Nancy was at our the book tour?
Absolutely.
Where we were all at in Houston.
Yeah.
It was fun chatting with Nancy.
That was cool. And there was a cool venue too. I'm drawing a blank on the name of it right now. And I remember that OG and I had to bounce a little bit early, but it was a great location.
I just remember beer.
Talking to Nancy.
I remember beer.
Yeah. Well, and from where we were sitting, kind of where we had that makeshift stage set up, all I could do was see where they were serving the beer the whole time. I was so distracted that whole time. I'm like, ugh. It's like Homer with donuts. Beer.
So what's Nancy up to, Doug?
Yeah, so Nancy wrote that her husband is celebrating what she calls a milestone birthday. I don't know why that's in quotes. They're all milestones, Nancy. But she writes, we are planning his party, and it was so nice to see that our work and our processes were set up for our finances at the beginning of our journey is going to allow us to spend like OG. I see what she did there. And she's got the emoji that's like the smiley face, but instead of the smiley face, it's dollar signs for the eyes and dollar signs for the tongue. She put 4 of those in there. That's how much she knows you spend, OG. And she says, and enjoy the experience with our families.
Oh, congrats to your husband, Nancy, and great job from a long-term stacker, Nancy.
I got a couple more, Joe.
Deal. Let's do it.
Can I keep going?
Do it, man.
Also, congrats. Stacker Carrie has done what looks like Duolingo for 500 days. She writes, while not life-shaking, been working on brushing up on my French for a while, just like thinking in that way daily. I was nearly fluent as a late teen, and I'd like to get there and then some. Part of my retirement plan is to have good chunks of time in France. Whose isn't, Carrie? In a recent trip, in France, I was struck by how overwhelmingly kind everyone was to me when I worked through speaking their language. Confirmed my wishes to spend more time there.
We met Carrie also on that same book tour when we were in Chicago. We were in Aurora. Carrie came up and introduced herself, and Carrie congratulated Duolingo for 500 days straight.
Yeah, I think I couldn't understand what they were saying because they were trying to speak in French. So I just tuned that one out. And then finally, thanks for the pics from stacker Jennifer, who took her SB swag to Pictured Rocks.
Remember, she was asking you advice, Doug, about how she should go to Wisconsin. You said go through the Upper Peninsula.
Yeah, she actually has, I think there were a couple other pics she posted too. I think maybe near the Mackinac Bridge and maybe one other. But yeah, that's, I was glad to be able to be a travel guide for her. And then finally, stacker Kate, who shared pics of their little baby Rio. What a badass name, by the way. Rio? So cool.
His name is Rio, and he dances in the sand.
Okay, 80s guy. So pics of their little baby Rio wearing a Stacking Benjamins onesie. I'm wearing one right now, Rio, so you're not that cool. Keep the photos coming as SB takes on the world. We're taking over slowly. You've got the mugs coming. We got onesies.
Yeah, we'll see how people can get the mugs. The mugs are really cool with the logo on both sides. Tina's working on that, but as part of our test, she said, should we send one to Doug? I said, oh, hell no. So she overruled me and apparently sent you one anyway. All right, that's going to do it for today. Wednesday, this was the prelude, everybody. Nick Majuli is going to be here to talk about the wealth ladder. Super excited to welcome him. We also have Doc G riding along as guest co-host of this podcast on Wednesday. So a ton going on, but still more to come today, because maybe the biggest part of the show is Doug condenses it all down and shows us what should be on our to-do list from today's show.
That's right, Joe. First, take some advice from our featured topic. While some investments are great when you're beginning in life, others make sense when you're well on your way to riches. Rather than taking generic advice from well-meaning people who don't know where you are on the road, take a minute to check how far up the wealth ladder you really are. Great news. We'll have more on that soon when the man behind of Dollars and Data, Mick Najuli. When Mick Najuli joins us soon.
That's good.
Wait, you don't want me to do second and the big lesson?
Oh, why not?
I got more, Joe. Second, converting your Roth IRA. If you're receiving the new senior deduction, maybe pump the brakes and put a few more dollars in the till for the IRS. But the big lesson? Don't ask Joe's mom about happy days. She'll remind you that the happiest days are when you're rubbing her feet. Yeah, that's as unhappy as it sounds. This show is the property of SB Podcasts, LLC, copyright 2025, and is created by Joe Saul-Sehy. Joe gets help from a few of our neighborhood friends. You'll find out about our awesome team at stackingbenjamins.com, along with the show notes and how you can find us on YouTube and all the usual social media spots. Come say hello. Oh yeah, and before I go, not only should you not take advice from these nerds, don't take advice from people you don't know. This show is for entertainment purposes only. Before making any financial decisions, speak with a real financial advisor. I'm Joe's mom's neighbor, Doug, and we'll see you next time back here at the Stacking Benjamin Show.
So you know what the best feeling on earth is, guys? Is when
yes, Joe, I absolutely know what that is. I have children.
You've living proof.
So now you want to ask that again? What's the second best feeling?
I love my children a lot too. Actually, I would say loving on your children. That is probably number one. Yeah.
8 p.m. on a Sunday, kind of severe thunderstorm rolling through, and it's raining inside your wife's closet and down your fireplace. That is the best feeling a human being could have, is all this rain inside your house. Call my builder. We're doing some work on the back of our house. And he goes, yeah, we're getting ready to replace the back of the roof so it matches the new addition, so the roofing. And we found some rotted wood around your chimney. And so we took off all the flashing and we put in some tarp. We put a tarp over it, and apparently the wind was high enough that it blew the tarp off, and our house just water damage all over the place. It's great. But what is amazing, two things that are amazing. Number one is everybody showed up. We had 5 guys at our house Sunday night at 8:30. I feel bad for all these people because, you got a family, you got stuff you're doing. And I'm very grateful.
Done a better job.
Well,
shouldn't feel so bad if they're like, yeah, what'll hold a bunch of rain? A piece of plastic.
Well, I still do feel bad.
Especially if there's like one guy in the group that was like, guys, I don't think this is going to hold. And then the other 4 are like, no, it's fine, dude. This is what we always do. I don't know,
New
man.
guy doesn't think it's going to hold.
Isn't it supposed to rain tonight or something? I mean, should we do something? Maybe we do this tomorrow after. No, let's knock it out right now. It's like, I don't know, guys. And he's like up there going, you sons of a bitch. I knew it. I told you guys. Shut up, new guy.
Our contractor, of course, general contractor said, when I said, I just, I feel gratitude and also just, it kind of sucks for these guys. He goes, the amount of money I pay them all year, they better be out here within half an hour. Like he was like, nope, they better be here. But 3 of the guys were from one of these restoration companies, emergency restoration, where if there's a fire or if there's smoke damage or whatever the case was, they were out here working. So for them, it's business as usual, but it also, what a job to be in. So now there's fans all over the entire house. They are going to be cutting out, there's blue lines all over the ceiling in different areas where they found water damage. They take this gun, this infrared gun, and you can see as they scan my ceiling where the water is on the other side of my ceiling. It's really fascinating. But what's wild is most of our house is one type of wood flooring that they don't make anymore. And it's one thing that I've hated since we've had our house. I just don't like the wood flooring look. And the good news is they're going to be replacing it all, because in one section of my house, it got wet underneath it and there's nothing they can do. So now we're going to be moving. Now, not only do I have an addition going on the back, but we're going to be playing musical furniture as a moving company comes and moves all our stuff to one room while they replace that floor, and then all the stuff to the next room while they replace that floor. It's going to be a great time.
So what color of deep shag carpeting are you getting?
Yeah, bright red, like the brightest red I could possibly get. You know why, Doug? Because that's the shag carpeting I had in my bedroom when I was a teenager. It was this red and black. And not only did it go across the floor and under my waterbed, because of course I had a waterbed.
Of course you did. That's exactly what I was picturing.
And not the new waterbeds where, it's a bunch of pockets and they don't. No, it was the one bladder.
Oh, yeah.
Right?
Just one giant bag.
That always had the one little air pocket that you couldn't find. So it was this sloshy mess. But not only did it go across the floor, Doug, it went up the wall, up one of my walls with shag
Did it
carpeting.
stop at the mirror on the ceiling?
The disco ball?
Yeah.
Did you see that? Was it an Airbnb listing where these people rented a house from somebody that apparently was a bachelor or bachelorette? And it was a beautiful house, except in the master bedroom where there would be, some stupid phrase like gather or whatever. It literally said Pound Town.
And there was this strange swing hanging in the corner.
Imagine renting. You're with your family. Maybe the grandparents come along for the trip.
Come on in here, kids. I think this is where the puppy pound is.